Hello, everyone. Welcome back. I got some really good ones for you today on this Wednesday, February 8th, 2023. A lot's been going on inside the markets, economy, politics, geopolitics. So let's dive right into it, shall we? First order of business, Fed. The Fed raised the federal funds rate 25 basis points or 0.25% at the beginning of the month. Pretty big meeting. However, markets got exactly what they were anticipating. They were totally pricing in a 25 basis point hike. I think a 50 or a 75 basis point hike would have been a little scary for these markets, even given the blowout jobs numbers we got for January. So markets got exactly what the Fed telegraphed to them. And we didn't have a lot of hawkish rhetoric on the back end of that rate increase with Powell talking about pain or wanting monetary conditions to be more restrictive or wanting to see unemployment, not wanting, but allowing unemployment to tick up a little bit. Nothing of the sort. The Fed said they were going to raise interest rates 25 basis points. They did. And then they actually came out and kind of calmed everybody. So that I would say the wording was kind of hawkish. The Fed's really trying to stick to their goals in fighting inflation. But just the tone, it wasn't very hawkish. It was kind of calm and dovish. And now that markets know there's probably only 2 or 3 more interest rate hikes for this year, and we're almost done raising interest rates. Well, markets kind of get giddy and are looking for any reason to inflate. Okay, so the Fed didn't come out talking about cutting interest rates or anything quite that dovish, but they didn't want to come out and use words like pain and just really like talk these markets out of bed. They didn't want to do that. So Powell came out, gave his speech, markets rallied. Powell did not smash them back down in his rhetoric. And then in the days following, we had Powell give a speech at the Economic Club of Washington a couple days ago. And again, he sounded like an AI chatbot, very relaxed, not a hawkish tone. He does want to reinforce that the Fed is going to continue to, fight inflation, but there's just not a lot of oomph behind it. Look, if the Fed wanted to win the war against inflation, all they would have to say is we're going to restrict the money supply, we're going to increase capital reserve requirements for banks, we're going to raise the interest rate above the inflation rate, we're going to roll off our balance sheet back down to like 3 trillion from where it's at right now, 8.5 trillion. Nothing of the sort. It was, yes, we're fighting inflation. Here's our 25 basis point hike that the market's anticipating, which is like showing up to a 5-alarm fire with a glass of ice water. And the markets like it, okay, because the reality is the Fed balance sheet remains very inflated at like 8.5 trillion. The Fed's kind of jawboning about wanting to roll that thing off, but I don't think the market's calling their bluff on that. And I don't think the market believes the Fed is going to meaningfully roll off their balance sheet from here. And I don't think the market sees the Fed really fighting inflation as much as the Fed would like to pretend they're fighting inflation. So the market's like that, okay, because inflation's good for price tags, especially for risk assets. So bottom line, we got a Fed rate hike beginning of the month. Markets were anticipating it. Markets love having their expectations met. Markets rallied, and then Fed did not pour cold water on that rally. So markets have kind of stabilized. They came back down a little bit today. We saw the 3 major indices pull back a little bit. We saw the 10-year yield today come up a little bit to 3.6% from about 3.5%. So a little bit of a sell-off, but nothing crazy. I would say Fed Chair Powell has done a pretty good job of keeping the market stable, and he's been getting help from Janet Yellen. Okay, so we had Janet Yellen go on Good Morning America a few days ago as well, saying with job numbers this strong, and with unemployment at like 60-year lows, there's just no way we're in recession right now. So Yellen kind of coming out saying there's no recession and don't worry about inflation. She's kind of trying to calm the waters. And then we have Kashkari, Fed president, going on CNBC yesterday, kind of trying to calm the waters, reiterate that the Fed wants to keep raising the Fed funds rate up to as high as like 5.5%. But markets don't really mind and can probably handle that, especially if the Fed is going to keep their balance sheet quite expanded and, continue to keep interest rates far lower than the inflation rate. which means in real terms, interest rates on the dollar are still deeply negative, and that allows risk assets to go up. So the Fed's, look, we're fighting inflation. Look at what a good job we're doing. And I think the markets are inflating, not because they think the Fed's doing a good job fighting inflation, but because the Fed is not doing a good job fighting inflation, the markets are going up. So yeah, we've seen stable to lower yields for the last couple weeks, which has given risk asset prices room to move higher. We've seen a highly anticipated bump to the Fed funds rate, only 25 basis points. Then we saw not really dovish rhetoric, but certainly not hawkish rhetoric to back that up. So yeah, markets have inflated quite nicely for the year and are kind of stable here. Fishing for cues as far as just how bad inflation is going to be this year, what corporate profits are going to look like this year, how badly the consumer's been beaten up this year. The market's just kind of putting its feelers out. But generally, the markets want to inflate, okay, because the Fed is keeping the interest rate pretty freaking low, and they're not doing a whole lot in terms of raising that interest rate above the inflation rate, which is sticky. If Janet Yellen is telling you there's no recession and inflation's nothing to worry about, then there's totally a recession, and you should totally be worried about inflation. We're in a recession, okay? You're standing in it. I wouldn't expect the mainstream media to come out and be like, it's official, we're in recession. I expect them to kind of change the definition of recession, which they did last year. It went from 2 quarters of negative GDP growth to like these other weird, specific metrics, so that they could say, even though we've had 2 quarters of negative GDP growth, we're not in a recession because look at employment, look at this, look at that. So that's what you're going to get, okay? And you got a little bit more of that at the State of the Union the other night. So we didn't see Biden talking too much about inflation or recession. He did talk about bringing down inflation, okay? But you could tell that's like high inflation isn't really something he wanted to spend too long talking about, because he knows that it's really hollowed out the middle class and is destroying everybody. So inflation continues to be a big problem. We're in a recession. I would say if you were to pull some random person off the street, they're not going to be like, oh yeah, my savings account is growing, my credit card balance is falling, and there's just wealth and abundance everywhere. I would say they're probably going to say the opposite. My credit card's maxed out, I have no savings, and I'm working 2 jobs to make ends meet. Which that narrative kind of feeds into the whole, everybody's got a job, we can't be in a recession. Yeah, everyone's got a job that's not paying anything. So they got to have 2 jobs now. So we're in a recession. Inflation's a problem, but the powers that be have done a pretty good job of reiterating to everyone that we're not in a recession and that inflation's going to be coming down. And so, markets inflate on that, all right? So we had the State of the Union address. Biden also wanted to voice his support for Ukraine, but I think low-key he knows it's not a popular war, so he didn't want to spend too much time on that. But he wasn't like, hey, you know how I sent 31 tanks, state-of-the-art technology, like a week ago over to Ukraine? Well, we're doing 50 more. Like, we saw nothing of that. I think Biden's actually realized that the tanks kind of freaked people out, and is kind of toned down his support for Ukraine. Just kind of what I see, but don't get it mistaken, all right? This war is going to be prolonged as long as possible. It allows both power structures to print cash out of thin air. War is like the lifeblood of the military-industrial complex, so it just kind of is what it is. So I don't see the war in Ukraine and Russia de-escalating. I do see the U.S. sending more support, just maybe not talking about it, right? So when they send that next 50 tanks or, whatever it is, I don't think they're going to make a big deal out of that. I think we're getting kind of to this point where, like, wars are fought without the public's even knowledge. I think America's done a pretty good job of conditioning its people to just go along with any proxy war or war we happen to be getting ourselves into. So Biden didn't want to spend too much time talking about the war in Ukraine. He didn't want to spend too much time on inflation because those are real pain points. And he didn't want to bring up the recession that you're in. They're just not going to say it, folks. So that's what you got, all right? Chinese balloons, okay. look, 4 months ago, a Chinese spy balloon crashed off the coast of Hawaii. We shot down this one over the Atlantic a few days ago. There's more spotted over Latin America. Look, there's probably tons of these balloons floating around out there. I'm not really sure if it's for surveillance or to deliver an EMP payload or just to poke the bear and show, like, look what we can do. We could theoretically, if we can float a balloon into your airspace without you knowing it, we could also float a balloon into your airspace with an EMP charge on it and take out half your grid. So maybe it was just kind of like a poke the bear, look what we can do moment. Certainly China is mobilizing its military and kind of trying to get fired up about expanding their empire with their eyes on, Taiwan. So maybe the balloons are just kind of a message to America, a warning. Look what we can do. Look, we could put a EMP payload on here. Look, we could spy on you. It's really not so much the balloons, though, as the reaction that I want to focus on. You can definitely tell the mainstream media wants to get the American public on some sort of like Cold War footing. Like, look, we have the Ukraine-Russia thing, and then we also have tensions brewing with China. So it seems like there's an axis forming between Russia, China, Iran, and that maybe those BRICS countries, right? Like Brazil, Russia, India, China, kind of forming their own axis against the West. Saudis kind of looking at the chessboard going, do I want to pay the West for protection, or do I want to link up with these BRICS countries and see what they have to offer? So we do have a changing global order, but I don't really think the Chinese spy balloons are that big of a deal. I think it's a little bit of a nothing burger. I think the only thing we need to really take away from it is the media wants us on a wartime footing, somewhat. Like, it's really weird. Like, they want you kind of afraid. They want you to know that they need more government spending to address these issues, but they also, like, they kind of got to walk that tightrope because, again, they're having a hard time drawing public support for these proxy wars and geopolitical tensions. So it's really interesting, but make no mistake about it, the beast system is feeding. I think these wars are good for most of the Dow Jones components, most of the S&P 500. Certainly good for companies like Boeing, Exxon, Chevron, Lockheed Martin, Honeywell. Honeywell's made bombs before. Fun fact for you, isn't that interesting? Honeywell is, they make a lot of like electrical components, and they make aircraft parts and things like that. But they're also in the bomb business. Okay, so you'd be surprised at what companies actually profit from conflict and war. So yeah, we got the Fed. They raised the interest rate. Markets reacted very favorably at first, but have now kind of stabilized. That's to be expected too, given the Fed burrito, as I call it, takes about 3 or 4 days to digest. So whenever there's a Fed meeting, for that 3 or 4 days following, markets become very volatile. I would suggest not trading it. Up is down and down is up in that environment. But then after about a week, you kind of see a trend emerge. So yeah, Fed raised interest rates. Markets are digesting the Fed burrito. We've seen a little bit of geopolitical tensions rising with regard to the Chinese spy balloons. Geopolitical tensions still remain high between Russia and Ukraine, but I would say the Biden administration knows that that's not very popular, so they're trying to navigate that. We're in a recession that the media doesn't want to talk to you about. We have an inflation problem that they'd like to downplay, and risk assets just continue to inflate. Okay, we have gold at about 1890 right now, so just under 2,000. Gold's doing that thing where it creeps back up. I think 2,000 gold is on the horizon. I think $25 silver is on the horizon. We're at about 22 now. I think we're going to be at about 80 to 120 a barrel in WTI crude for the year, and we're at about 78 right now, so maybe a little bit higher to go in oil before we're in the range that the powers that be want us to be in. I think we could see a little bit of disinflation this year, so the rate of inflation falls a little bit, but make no mistake about it, folks, disinflation is still inflation, because all disinflation means is the rate of inflation is falling. So if we had 7% inflation last year, well, we could have 6 this year, okay? And that's still high inflation, but it's coming down. We could have 5% inflation for 2024. That would be disinflation. You still have 5% inflation for 2024, but it was 7, then 6, then 5. So we could continue to see a little bit of disinflation. Markets want to see that. But yeah, nothing too crazy. I don't believe that the Fed is over-tightened, and once the lagging effects of this tightening hits, we're going to crash. I don't see any crashes on the horizon. Watching that 10-year yield, though. So all that would change if the 10-year yield started to spike uncontrollably. That would be your crash in the equity market. So any crash we have, I believe, is going to start in the debt market. So just keep an eye on bond yields, and if bond yields start to spike uncontrollably and interest rates and the dollar start to spike uncontrollably, well, there's your market crash. But I don't see one. You can sit in the crow's nest and watch, rates and yields if you want, but I don't really see a crash on the horizon. I just see a Fed that's almost done with interest rate hike, increases to the Fed funds rate, and a market that's getting very bullish just off anticipation of the Fed being done raising interest rates. So yeah, inflation remains a problem. Geopolitical tensions remain. AI wars, okay, and then I'm going to let you go. So the AI wars have officially begun. Google sold off about 7% today because the AI wars are really starting to heat up, and this GPT chat technology can be very disruptive. I think a reason that Google investors are kind of worried about this new GPT chatbot is that people won't even need to do Google searches anymore. I think Google's worried that people are just going to ask the bot to do everything for them. Hey bot, when is the concert? Hey bot, what's the weather tomorrow? Hey bot, I need a grocery list. Hey bot, write me a song. And if people start just using these AI chat bots to get all their information and write all their papers for them, well, that leaves Google scrambling. Google is, gonna catch up. I'm sure they have unlimited money. A really monolithic enterprise. So I don't think Google's gonna miss a meal, but we do see Google kind of getting nervous about this AI war that we see between different companies trying to come up with the best AI technology. So Google's kind of nervous, but I think they'll catch up. And I think the tech sector is about to see immense headway in AI, and I think it's going to be very disruptive over the next few years. So that war is officially underway. It'll be interesting to watch how it plays out. Otherwise, though, I'm tentatively bullish on the tech sector. I like, some of these companies that have nothing to do as much with AI, like even NVIDIA. I like, I'm sure Tesla's doing AI things, but I like Tesla. I like Disney. I like some of these big monolithic tech companies. I'm not too partial to Meta, but be careful. Mark Zuckerberg is very smart dude, and Meta's had a rocky start with the metaverse, but we'll see what comes out of that. So I'm not really a big fan of these tech companies like Meta or Netflix, but they might do well too. So yeah, we're just gonna have to see. Wrap everything up, and then I'll let you go. I'm tentatively bullish. Risk assets, so Bitcoin, oil, stocks, gold. I think we're almost done with the Fed rate hikes. Probably have another 25 to 50 basis point hike, maybe 2 more of those for the year. So we'll raise rates another 50 to 75 basis points, call it, and then the Fed's going to try to hold rates steady. But I'm tentatively bullish risk assets in this environment. I think they're all going to do well. I think fixed income is not the place to be. Bonds are not the place to be. I like risk. I like growth. And I think inflation is going to be a sticky problem. I've been saying that. And yeah, we're just going to proceed, okay? I like to see Bitcoin hanging out at around 23, 24, kind of coming back from the dead. So that's good to see. The crypto market has been down, but not out. So yeah, bullish on Bitcoin and the crypto space. So we're just going to keep going, all right? But that's all I got for you for right now. And thanks for watching. Like, subscribe, share, comment, whatever. You guys are awesome. Till next time.